everyone, and welcome to my more important analysis videos on Friday 13th of April with me, Rich Perry, market analyst at Hantec Markets. Interesting moves on markets. We've had this improvement in sentiment in the last couple of days as the sort of rhetoric around Syria has sort of calmed down a touch, but it's still going to bubble on in the background, I think. And subsequently, I think that's going to continue to be the case. But risk sentiment has improved with that, and subsequently we're seeing VIX volatility falling to 3-week lows, just below 20 now. And we're seeing S&P 500 sort of pushing up. It's very close to a head and shoulders reversal pattern if you're looking at your technicals, and that is needs to break out above 2675 for that. So yeah, watch out for that today potentially. Wall Street futures are flat at the moment. As you can see, S&P 500 futures flat. Equity markets are sort of slightly positive. Again, the DAX performs on an up day. Watch, that's interesting. That continues to be the case, certainly against FTSE. And what we're seeing is the dollar, which is sort of underperforming a touch today as the euro has sort of rebounded slightly this morning. But also you're looking at this more risk positive outlook with sterling very strong. The commodity currencies are also very strong. We had a surprise fall in the China trade balance, moving into trade deficit in March. But imports were higher than expected, and subsequently we're seeing the commodity currencies performing better on the back of that. Certainly the Aussie is the big outperformer today, along with FTSE. Along with sterling. Gold moves are very interesting as well. There, the gold price is moving around on the Syrian issue. And what we do also see is the oil price, which continues to make gains and sort of breaking out above 67 on the WTI contract, which is certainly a key level to break near term. Looking like it's moving towards 70 on that. Let me just show you the chart, which is broken out on the upside. So yeah, lots going on. Interesting moves that I will talk about in a bit on my chart of the day on Euro Sterling. But in front of that, data points today. Michigan sentiment at 3 o'clock. And JOLTS jobs openings. Michigan sentiment expected to come in at 100.5, which is slightly down from a downwardly revised 101.6 last month. I'll say it again, the Reuters data annoyingly still shows the prelim reading. So that's prelim to prelim. But then the final reading got downwardly revised slightly to 101.6. 100.5 is expected today on Michigan sentiment. That still remains very strong. JOLTS jobs openings slightly down from 631 to 617 is the expected release today. Now, my chart of the day, Euro Sterling. Look at this chart. Massive breakdown on Euro Sterling. Since September, the market has basically been in a 300 pip range, sort of 87 to 90. Broke down decisively yesterday, closing breakdown, seemingly again continues today. It's 34 pips down. Now, having broken that range to the downside, you'd sort of start to think about maybe 300 pips of downside. So you're looking at sort of 84 region in the coming sort of months, I suppose. And you'd now be looking at selling into strength because you've got this this sort of run lower that we've seen in the past month. It's not an exact downtrend, but certainly you can see the trend of lower highs and lower lows now, obviously. You've got the momentum on the RSI failing in the mid-40s. Look at that on the MACD lines. Buzzing around and then bear cross, and then a bear kiss to the downside. Stochastics accelerating the downside. Now, RSI is around 30. Which is sort of tends to be a bit limited. 25 it hit back in September during that big sell-off. So you could see that, I suppose, a little bit of further downside potential in this latest move, but you'd be looking at selling into strength now. And I think that anything around 87 figure is a pretty good sell point on Euro Sterling on a medium-term basis, but you've got the resistance at 87.40, and anything up towards 88 figure I think is still very much in terms of your medium-term outlook in a sell zone. So you'd need a break up above 88 figure to really suggest that this market is in sustainable recovery mode. But for now, certainly any intraday rallies are a chance to sell. In terms of initial support, you're looking back at sort of May last year now, in this sort of trading phase here of May last year, back at where you're sort of around the 86 figure area, that reaction low there, and then at 85.20 area. So there is a sort of a basis of support, I suppose, around that 85 figure, 85.20. But yeah, 86 figure is the next sort of minor support, but there isn't a great deal of support really until you get towards the 84 area, which is exactly what that breakdown today is, or breakdown yesterday is targeting. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.